What happens when America's closest trading partner gets hit with a tariff threat so extreme it sounds like an embargo? Because Trump just warned Canada pursue a trade deal with China, and the US could respond with a 100% tariff on Canadian goods. And that's not normal trade tough talk. A 100% tariff isn't a tweak, it's a shockwave. It hits factories, supply chains, consumer prices, and politics on both sides of the border. Let's break it down. I'm Imran, and the big question is this a threat to Canada or a threat to the United States too? First, what triggered it? Reports say Canada has been exploring deeper economic ties with Beijing, and that includes reducing barriers in certain areas while securing relief for Canadian exports in others. Trump's response was blunt. He framed Canada as a potential backdoor route for Chinese-linked goods into the US market, basically a North American bypass lane around US tariffs on China. So what's the real logic here? This isn't only about Canada, it's about China and trade routing. The US has tried to cut China's market access through tariffs and restrictions. If Canada expands trade channels with China, Washington fears Chinese products, or Chinese supply chains, could enter the US through Canadian pathways. Whether that fear is fully accurate is almost secondary. Politically, it's a clean narrative. Canada is helping China dodge US pressure. Now let's talk incentives, because this is where it gets real. Canada's incentive? Diversify. Canada is heavily dependent on the US market. When Washington becomes unpredictable, Ottawa's rational move is to build leverage elsewhere, and China is too big to ignore. Trump's incentive: deterrence through maximum pain. A 100% tariff threat is designed to stop the deal before it becomes real, and to warn other allies, don't cut side deals with Beijing. Now here's the part people miss. This can boomerang on the United States, because US-Canada trade isn't they sell, we buy. It's deeply integrated production, especially autos, metals, machinery, and cross-border manufacturing. So if tariffs spike, it can also mean higher input costs for US manufacturers, higher prices for US consumers, supply chain disruption, and a North American political crisis right when Washington is trying to manage China, and there's a second risk: alliance damage. If Washington treats closest ally like an economic target, it doesn't just punish Canada, it teaches every middle power to hedge harder, quietly and permanently. So what happens next? Watch three things. Does Canada pause or repackage the China deal with quotas, carve-outs, tighter rules of origin, or stricter enforcement to prove it's not a backdoor? Does Trump formalize the threat into actual tariff steps, or is this leverage for a separate negotiation? Does this spill into North American trade rules overall? Because agreements don't matter if leaders start acting like the rulebook is optional. Bottom line, Trump is trying to block a Canada-China opening by making the cost feel unbearable. But if he follows through, this isn't just Canada's problem. It's a North American supply chain problem, and potentially a self-inflicted wound for the US too. If you want more fast breakdowns like this, hit like, subscribe, and share. And comment this: does Canada back down, or does it double down and call the bluff?